Warren Buffett, one of the famous investors in the world, started investing at the age of 11. Now his net worth is 1040 crores US dollars. There are many investors who started investing in their early ages and become a billionaires today. So if you want to be a part of the billionaire gang and become a billionaire yourself, watch the video till the end, because in this video I will give you the benefits of investing and the ways to invest your money in your 20s. And stick till the end of the video. And I have linked all the timestamps below in the description. I also pinned it in the pinned comments in the below. So if you want to skip through the different sections of the video, feel free to do that. And if you like the entire video, consider subscribing, which will help me. So there are a lot of benefits of investing in your early ages, in your 20s. And the top 3 I think which are more important are: 1, you have time. You have a lot of time to invest your money and look at appreciate it. So number 2 is you have the risk to take. You can take risk and average them in the later part. And 3 is you can experience the power of compounding. In this compounding thing is interesting one, and people say that it is one of the 8 wonders of the world. So stick till the end of the video. I will cover all these sections in the coming sections. So when you start investing in your early age, which is in your 20s, you have a lot of time to invest your money, which is like, let's say you invest till you're 60, and for 60 to 65 years of your age, and that is like a solid 40 to 45 years of continuous investment. So let's say you invest just 1,000 rupees per month consistently for the next 40 to 45 years. By the end of your when you become 65, and if you get 15 to 20% of returns of what you have invested, you will become a crorepati. You will have more than a crore in your account. So this is the power of investing in the long term perspective. So you have a lot of time to invest your money, and you have a lot of time to learn new stuff. You have a lot of time to try investing in a lot of different financial instruments, and not put all your eggs in the single basket. So that's the power of investing in the long term. And if you are in your 20s, you have a lot of time to invest, and you can see the value of getting appreciated over the years. The best time to start investing was yesterday, and the second best time is today. So start your investment as early as you can and benefit from it. So while you are young, your risk appetite is high, and you can take a lot of risk while you are investing. And you have the opportunity to choose a lot of financial instruments which are high risky and high rewarding. So that is a quite interesting and a famous formula in the financial investment world, which is high risk is equals to high reward, and low risk is equals to low reward. And if you start early, you have the opportunity to take a lot of risk. Your risk appetite is high, as I said, and you can try out financial instruments which are highly risky and highly rewarding, like cryptocurrencies, let's say. So you have the opportunity to do that. Also, if you start investing early and suddenly the market crashed, you have the better chance of averaging it, and you have an upper hand over others who are started late in their life, investing late in their life. So that is one of the biggest advantages. When you start early, you have the opportunity to average the losses and get better at it. So let's say you started investing in 2020, new year, new beginnings, and all of a sudden in just 3 months the market crashed. In April the market crashed. So if you acted smartly in that point of time and kept on investing regularly, monthly basis or weekly basis as you choose, your money could have been double or triple in a span of just 9 to 12 months. So if you have invested 1 lakh, it could have become 2 or 3 lakhs at this point of time. So that is the power of starting early, and you have the better chance of averaging it, because you stayed consistent and kept on investing in spite the market going down. So be consistent with it, take some risks. So because if something is going down, that doesn't mean that it will go down forever. It will go back up at some point of time. So if you start early, that is one big advantage I see is you can average the losses. So now let me quickly show you the power of compounding. So I am going to open a compound interest calculator on my laptop and quickly show you the power of compounding and why people call it the 8th wonder of the world. So we are on this calculator by HDFC Life right now. I've told you in the previous section that compounding is one of the benefits of investing early in your 20s. and in this part I will show you the power of compounding. I thought of like explaining it, but that won't do justice to the power of compounding, so I thought of going to this calculator and showing how compound interest actually works and what is its actual power. So I'm using this calculator by HDFC Life. You can use whatever calculator you want. You can just write in paper and calculate it, but I found this useful, so thanks to HDFC. And so let's play with these numbers for a bit right now. And it's asking how amount you can invest today. Enter the amount you have to support. So let's say I'm happy with going with 1,000. So let's say 1,000. My initial investment is 1,000 rupees, and it is asking this, in the next section it is asking about how amount you want to invest. So I'm deciding to invest 1,000 rupees monthly. So you can also choose to do it annually, but I prefer doing it monthly. And number of years you want to invest. So let's say you are 20 years old and you are going to invest till 65 years. So let's say you are 60, so you are going to invest till 60, and it's like 60 minus 20, which is 40 years of investing. Let's go with 40. So 40 years of investing. So you are going to invest like 1,000 rupees each month for 40 years, and you want to stay invested for at least 40 years for the day. And let's expect annual return of 15% over here. So as you can see, when I change these numbers, you can see the values and the returns you get is also changing. So after 40 years, your investment will be 4.18 lakhs, and which will have grown to be 3.18 crores at 15% annual returns, which is crazy if you think of it. So just by investing 1,000 rupees per month for 40 years consistently, you could become a crorepati. And this is the power of compounding. And let me show you the other one. Like if I increase, let's come from the first one. So I'm trying to decrease it to 35 years, okay, and I'm also trying to decrease the number of years I stay invested to 35. As you can see, this within a span of 5 years, 50% of the money which you have got is vanished all of a sudden in just 5 years. So by just sticking to the investment plan, sticking to the point where you have to invest like 40 years, staying invested for 40 years can give you like double the amount which you can get, which is 3.18 crores. And if you go back to 35 years of investment, you will get only around 1 point something crores. So which is a crazy thing. And if I try to improve this, if I try to go till 45 years of investment, let's say, and I'm staying invested for 45 years, as you can see, it is changing lively, which is 6.71 crores or 15% annum. And let's say if you are someone who is investing in high risk high reward kind of financial instruments, it's usually you will get around 15 to 20%. Let's say it's 20%, okay, and let me move that to 20%. Did you see that what happened? It went from 6 crores to 46.64 crores, which is like, this is the power of compound interest, guys. This is the power of starting early. This is the power of staying invested for a long term basis. And in the last year, in 2020, Nifty has given 48% returns. Just imagine what the return you will get if you get around 40 or 30 to 40% every year. This is such an interesting thing. And so this is the power of compound interest. And as you grow older, like if you are 20 years old, 1,000 rupees per month is justified, right? And once you grow older, once you start earning, you have the opportunity to put like extra money into it. You can convert this 1,000 to 2,000, or 2,000 to 5,000, 5,000 to 10,000 maybe. So at that point of time, when you increase this number, let's see what if it's 10,000 rupees per year. And if you see that, did you just see that it's like 10 times bigger? If you invest 10,000 rupees per month, it is at the end of 45 years, you will get 460 crores, almost 460 crores at 20% return per annum. And you can just play around with it. I will put according to your constraints and whatever. So play with it, play around with it. And I just wanted to show you the power of investing, power of starting early, and power of compounding when you start early. So the three benefits, as you see, the three benefits are: one, you have a lot of time; number two is that you have a higher risk appetite; number three is you can experience the power of compounding, which is one of the best things of starting your investment stages earlier. Now that we have seen the benefits of investing early, and you all might have the question that where can I invest? How can I invest my money? I have money, but I don't know where to invest. So these are all the questions you might have right now. So let me tell you some of the ways with which you can invest your money right now. And the top four most famous investment strategies, most famous financial instruments in which you can invest are: number one is FDs, which you can put in your bank; number two is stocks, equity; number three is gold; and number four is fixed deposits. There are a lot of other instruments as well, like cryptocurrencies and many others, but I think these are the considerably safest at this point. And if you want to take more risk, yes, go to cryptocurrencies and others, but I think these four are the essentials and most basic and important financial instruments where you can invest. Now let's talk about FDs, fixed deposits. So fixed deposits, out of all the four financial instruments I mentioned, fixed deposits, FDs give you the least returns, and just like 4 to 5 or maximum 6-7%, which is crazily low compared to other financial instruments which I mentioned. And if FDs are good, if you are someone who is above 40 to 45 years of age, FDs are good. At that point of time, your risk appetite is very low, and you have to protect your money for the future. But you guys are in your 20s, right? And you have a higher risk appetite than others, so you can take risk. So you can go into something which is high risk, high reward game. And FDs are low risk, low reward game, which is, I considerably think that you have to stay away from that, because in your 20s you can take more risk and experiment with a lot of other high risk, high reward financial instruments. Now comes real estate. Real estate requires a huge capital investment, and you have to put in a lot of money initially to get that real estate. So as you guys are in your 20s, it's not possible to afford it. So let's cross this one out. Now let's talk about my favorite financial instrument, which is stocks. Stocks are the best, and it's basically high risk, high reward game. And if you choose the right stock, you can be safe and grow your money easily. One of the best ways to grow your money as well. And if you invest in a stock, you are actually buying a part of the company. And a lot of people, I think, misunderstand or don't understand the concept of stock. So basically, if you buy a stock, you are actually buying a part of the company, which means that you are a part owner in that particular company. So let's say, let me give you an example. Let's say you are buying stocks like 10 shares in Reliance. Let's say Reliance is worth 1,000 rupees, and you are buying 10 shares worth 10,000 rupees. So if you calculate what the Reliance worth is and what the worth of that 10,000 share, 10 shares which is worth 10,000, it might be somewhere between 0.0001%, which is actually true, and you are the owner of that 0.001% of Reliance, which is interesting, right? And stocks usually provide around 15 to 20% of returns, which is nice compared to all other financial instruments which I have mentioned earlier, like from FDs to real estate. It is like almost double the investment which you get. Also, 15 to 20% is not the stable one. It can be higher, it can be lower, but usually it's around 15 to 20% returns. It's quite easy to invest in stocks. You just need your demat and trading account ready. You can open them with any of the stockbrokers out there. There are a lot of stockbrokers in the market, like Grow, Zerodha, Upstocks, and many other players are there. I personally use Zerodha. They are one of the leading stockbrokers in the market out there. If you want to open a Zerodha account, I have left the link in the description below. You use that to open your account in just a few minutes. It hardly takes like 15-10 minutes. That's it. So go and open an account for you as soon as. We Indians have a special affinity with gold, and we respect gold a lot over here. And gold is respected because it has a status attached to it. So a lot of people try to buy gold in the form of jewelry or physical gold, which is completely fine if you are looking at it as a ornament or something like that. But if you look at gold as an investment perspective, it's advisable not to buy physical gold or jewelry, because you have to. There are other costs attached with it. Like you have to look for banks where you can keep it safe, and you have to pay for the bank lockers. So there are a lot of other additional costs attached with buying physical goods. So if you can't buy physical gold, what should you do? If not physical gold or jewelry, where should you invest? So So the RBI of India, the Reserve Bank of India, provides something called sovereign gold bonds. It's completely digital. You don't have to go and find bank lockers to keep it safe. It is completely digital. It's purely 100% pure gold, and it's safe as well because it's provided by the government of India. And they issue this gold bonds every month, each year, at the initial few weeks, few days. The open window, I will put the link in the description where you can check the open window and invest according to your capacities. That's it for me, guys. Thank you so much for watching. Remember this one thing: the best time to invest was yesterday, and the second best time is now. So start your investment as early as you can. See you guys next one. And before leaving, I will if you found this video informative and it helped you kickstart your investment journey, consider subscribing to the channel, like this video, and share it with anyone you know. So see you guys next one. Bye bye.